Hi, everyone, and welcome back to the AMA session with the topic Geopolitics and Crypto Risks and Reactions. It's really good to see you all again. It's been a couple of weeks. The last couple of weeks have been a little bit better than earlier last month. There's been a rebound back on the crypto price on Bitcoin, which has been very good. I'm sure that has helped some people out there. And if you've been following us, in our last two sessions, we talked about global inflation, and we also talked about the convergence of AI and blockchain. But today, we're going to dive into what I think is really the biggest and perhaps the most underrated force shaping our market currently. And it's about geopolitics and crypto. It's not just about charts and candlesticks anymore. That's all very helpful in technical trading, but that technical trading is being driven by macro influences, and especially at the geopolitical level. And it's about shifting power dynamics, global tensions, which there are many, and how regulators are reacting to it all. How do they react on a regional level, and how do they react on a global level? And I know what you might be thinking. What do U.S.-China tensions have to do with my Bitcoin portfolio? And the short answer is a lot. Not just China, but any kind of tensions around the world. It used to be the world was a very divided place where every country was a silo, and everything that happened inside that country didn't really impact, except for maybe the very large ones, but didn't really impact the rest of the world on the economics and their relationships with other countries. It basically affected those markets. They weren't connected. And over the last 20 years, I'm talking mostly equities, and then of course crypto followed on. The world has become connected, and so small countries are connected to each other. The big countries are now influenced by smaller countries, and it goes on and on and on. So now what we have is a very large spider web of the world. And if any of you are familiar with spider webs, they make a big web, and the spider sits in the middle, and he waits for his food to run into the web. Now, he doesn't sit on the edge, he sits in the middle, and he waits for his food to get ensnared in the web, and it starts moving around and sends signals to him that there's food on the web, and the spider shoots out and grabs his food and has dinner, right? So you have to think of the world as a big spider web now. So some of you may have heard of the butterfly effect. When a butterfly flaps its wings halfway around the world, it causes a typhoon to happen in Bangladesh, and it's all connected today. So on the geopolitical level, this becomes even more important, especially since crypto is such a sensitive asset. It's very sensitive to these tensions, both on a regional and global level. So we really have to pay attention to these forces, because these forces influence liquidity, shape adoption, and redefine where the true opportunities lie. So our goal today is to break down these complex forces, and it's very limited. We have 30 minutes here. But we'll try to do our best down these complex forces into actionable insights. And during this, feel free to drop your thoughts, questions, insights into the chat, and I'll answer later. I'll try to get to most of them in the Q&A section. So you may have seen there was an article that came out, or an interview of Larry Fink, who's head of BlackRock. And he coined the phrase that Bitcoin is an asset of fear. And what does that mean? Well, it seems that during periods of concern, primarily about personal safety, financial security, geopolitical tension, which is the one we'll focus on today, or long-term fiscal risks such as rising deficits or the debasement of traditional currencies cause the movement of Bitcoin to accelerate. So when people are less fearful, like a trade agreement with China, and when that happened, the trade agreement happened, you saw a slight downturn in Bitcoin price. So in addition to the talks when the Ukraine was talking about peace talks, again, there was a downward movement in pricing. So we call this the asset of fear. I think that's a great way to describe Bitcoin. And the Bitcoin is so when things get bad and Bitcoin becomes a safe haven asset. Now, typically during global tensions, the safe haven assets are real estate, gold, all the hard assets, and the financial assets get hit. The Bitcoin actually works in reverse. So when things become uncertain, Bitcoin starts to come alive, and this is a very important thing. So as we go through this, I want you to keep that in the back of your head. So I just want to share some key insights here that U.S.-China tensions and EU rules shape regional capital flows. Event risk, sanctions, capital controls lifts demand for borderless assets. Borderless assets, obviously, are crypto, and event risk is what we're talking about here, geopolitical risk. It increases the demand for those borderless assets. Regulatory fragmentation also causes multi-market, multi-partner strategies to evolve. And investors start to prioritize POR transparency, proof of reserve transparency, and third-party audits. And the stable coins, compliant stable coins evolve as core settlement rails, right? So we'll come to those. These are I want to talk about these different points. But before we get there, I want to, talk about, money, and money is power and power is money, as everyone knows. So it's really important that it's worth paying special attention to the technological revolution that's happening with crypto that's disrupting the world's money flows at the very moment global political power is shifting from familiar foundations. Cryptocurrencies won't change the global balance of power alone, but they will speed and distort the changes underway. So, if a country, let's say a small country, feels threatened by the larger countries, say US or the EU, typically those countries will place sanctions, economic sanctions on those countries when they want those countries to try to do something, to what they ask them a favor to do. And if they don't do it, then they do sanctions on those countries. And those sanctions typically include are dollar based. So a lot of those smaller countries who have moved towards the digital assets are not affected by that because they close contracts and they trade in Bitcoin rather than in the US dollar. So the revolution that we're seeing is a simple promise that decentralized ledgers and sophisticated algorithms and massive computer power will allow the transfer of money, stocks, and other property at the cost of an email and with the security of an armored truck. This is a very big deal, and as we move towards that, and a lot of you have been involved in crypto for a while, you'll see that's been the trend, right? And these technologies will move the fastest during where central bank digital currencies become tools of the government control. And the big countries, the liberal democracies, if they don't encourage faster innovation, develop more balanced regulations, and reinforce the strengths behind their markets, then economic and political power will flow elsewhere. So if you think back a number of years ago, this is a little bit off subject, but it will tie back in. If you think about the internet, so you had the internet, and before the internet was TV. So a lot of the advertising that you saw on television, and that you were forced to watch, you could change the channel, but pretty much on every channel was the same thing. If you're old enough to remember this, and you were forced to look at these products. And when you went to the store, you bought these products because that's what you've been marketed to buy. And then the internet came along, and the internet was basically a great equalizer. So it allowed smaller brands, where before you couldn't know about them, now they could go onto social media, they could advertise, and as a consumer, you could have access. First of all, you'd have knowledge about these brands, and then you could have access to these brands to actually order them. And this changed advertising and changed the medium by which advertising went through. So this is very similar, what we're heading in, because before, smaller countries basically had to follow what the big liberal democracies were preaching, and because if they didn't, their exports would be punished, and therefore their populations would suffer because of going against those democracies. And today, because a lot of these smaller countries are able to pivot much faster than the larger democracies are to crypto, they're able to get leverage and get more on an equal playing platform. So now if they disagree with a policy, they're not forced to pay a heavy penalty, which before was dollar based. So any contract you couldn't buy oil, you couldn't buy gas, and it made the country suffer because of their choices. Now today, it's an equal thing. So how does this tie into crypto? So you're trading crypto. Crypto is very volatile. And I think as a long-term asset investment, I think it's a very good hedge against everything out there. And the short-term guys, the short-term traders, are the ones that have to be sort of aware, of the fluctuations, because unless they have very good market timing, they're going to get hurt, right? So, and most people don't have good market timing. You hear about the people that made a lot of money because they timed it perfectly. Those are rare instances. Maybe they got lucky. Maybe they're extremely smart. Who knows? But it's not something you can necessarily count on. So the idea that you invest in there and understand that when political tensions increase, most likely, not guaranteed, most likely the value of Bitcoin will move up. It really depends upon what what impact. So as an investor, what do I look at? I read some articles about global tension in obviously in UK or in Ukraine and Russia. I read about tensions between China and the US. So as an investor, I have to sort of become a critical thinker and say to myself, what is going to move the markets the most? Some small regional conflict may move it a little bit, but you have to be able to connect the dots from an event that happens. And so you have to do more reading than just your local reading. You have to, read about the local event and then get a broader perspective, keep on expanding that out until you can see the connections, potential connections, and how it will impact crypto, and therefore how it will impact your investment. And this is very hard to do. And so you have to be proactive. You can't be passive in today, because you've got emerging technology happening at the same time that you have political tensions increasing. You have immigration, you have lack of immigration, you have all these movements of people around the world. How are these movements going to impact crypto? And in the end, some of these events potentially could cause us to go into World War III. You have Taiwan and China issue, you have Japan and Taiwan issue, you have India and Pakistan, you have even regional conflicts that have the ability to expand to a much bigger thing. So what will happen during Bitcoin? If we follow the tenet that Bitcoin is the asset of fear, and global fear increases, potentially you'll do very well. No guarantee, right? This is not a one-for-one forecast, but potentially it should get better. And the bigger impact on the world, the bigger the movement should be. And we talked at the beginning about how the last month or since about the middle of October, the falling price of Bitcoin, and a lot of people are trying to figure out what happened and why it happened. And the conclusion, at least on the thing I read, maybe you read something differently, but the things I read and saw was that because Bitcoin is such a leveraged asset, that the deleveraging caused a lot of that movement, and that the long-term fundamentals were intact, right? It hurts. It's very painful. It dropped 25, 30%, whatever the number was. It was significant. And now it's come back a little bit. And it was not necessarily a fundamental question, or was the world becoming less, with less global geopolitical tension? Because that's not the case. It's actually increased. So I think you have to, sort of look at all these big areas and then tie it to larger news. What impact will this have, right? And the question is, what's your time horizon on your investment? If you're a trader, again, you have to get very good at market timing. Big risk, big reward if you're right. And if you're not right, you can get hurt pretty badly. But as a long-term investment, I think you need to pay attention. So in times when the world sort of calms down, maybe that's an accumulation phase for you, right? Where you start accumulating more Bitcoin as the price either drops quickly or stays lower for a longer period of time. In anticipation that global events won't always stay quiet. In fact, I think they're probably going to increase. So this is going to be individual decisions based upon, your time horizon, your personality. I talked about personality before. And so I think it becomes really important for you to pay attention to these things. And, I'm looking at some of the questions coming in, and I see some great, really excellent insights that I see. So one of the questions that came in was, what signals should retail investors watch during geopolitical instability? Well, again, that goes back to what we were just talking about. This is potentially beneficial for you, right? The more geopolitical instability there is, the higher Bitcoin may move. And when things calm down, so it basically goes in reverse of traditional finance, right? But again, we're not talking about 100% of your portfolio, right? So So if you have a core investment into Bitcoin, you can trade around these positions, right? You trade around them and trying to enhance your long-term return. And so, you take a small percentage, maybe as geopolitical instability increases, you offload some, and then as it calms down, the price rocks down, you add back in, but only on small percentages of your portfolio. Just trading around, trying to make a better return. And question number 2 that I see is, what factors determine whether geopolitics creates a risk-on or risk-off environment for crypto? And that's a good question. I think in your assessment of what's going on, you have to sort of come to the conclusion of, okay, this event happened in a small country. Again, so then I take a bigger view, I spread it out a little bit, and I say, okay, what impact will this have? You have to connect the dots, right? So, and then in your assessment and in your analysis, you may determine that this will ultimately be a much bigger impact on political tension around the world, and will go on for a sustained period of time, and then you'll act accordingly. You'll typically would buy more crypto to take advantage of that. But again, this is on your assessment. So I think you start small, and then from the small position that you're taking, or from the small opinion that you have on this event, try to connect the dots and make it logical on politically why this would happen, and then trade as you see fit. And then, hedging. The third question I have here is, how should investors hedge risks during geopolitical fluctuations? Again, this is not typical, right? So, you most likely will do better in times of severe geopolitical fluctuations being in crypto than other assets. Not again, it's not guaranteed, but typically when that happens, the impact on Bitcoin is a movement up in price. And so really you have to start thinking in reverse. How do I hedge my Bitcoin portfolio against geopolitical fluctuations? So maybe the answer is traditional assets. Maybe you have some traditional assets in your portfolio that do better during times of quiet, when there's no fluctuations in geopolitical and there's no geopolitical tensions, and maybe that's the new hedge. Not really sure, because it's so new and things change so quickly. But this is something that you might want to think about, in the future. And then you have number 4. Which countries are currently the most crypto-friendly in terms of policy? And you probably know this as well. It's, Switzerland is up there, Malta, Singapore, UAE, Germany, El Salvador. And if you look, most of these countries are very small countries relative to the rest of the world, and so they're able to make a transition. They see the advantages in moving towards a crypto-based economy, and they can move rather quickly as compared to the much larger economies of, let's say, EU and US, because in those big economies you have a lot of decision makers who all have different agendas, and so there's long debate. They're like a big super tanker trying to turn direction, and it takes a long time for them to make a pivot or to turn, whereas the smaller countries are able to do it on a much faster basis. So I think this is a huge advantage. So I think I think they're doing the right thing. I think, and then as the smaller countries start adopting that, then that's going to force the bigger countries to follow suit, but at a much slower pace. The fifth question that I see is, how should long-term investors position themselves when global politics become unpredictable? Well, that's sort of a tricky question, because I think all global politics are unpredictable. I don't think anyone is capable of analyzing, at least on a short-term basis, what all these politics mean. What it means to the world, what it means to crypto, what it means to the citizens of those countries where it's happening. And so I think, again, I go back to a familiar term, way of thinking is that I think you have to commit to a path, and be able to review that position daily basis. Read. Knowledge is king for you. The more you learn, the more you read, the more you understand, the more you can connect the dots, and the better decisions, hopefully, that you can make with regards to your portfolio. And so I think there is no way to position yourself 100%. You can take what happens most of the time, most likely to happen. Doesn't mean you get rid of the risk, you just mitigate the risk. And in this current environment, it looks like, when the world is unstable, and there are political tensions, depending upon how impactful those political tensions are, will determine, how far up, Bitcoin should move, and how far the other assets depreciate. And so I think you have to have a little bit of both. And I think that's the only way. It's like driving a car. You drive a car, you don't drive just one speed. You drive fast, you drive slow, you have to stop, you have to turn right, you have to turn left. This is how you have to be as an investor. You have to be able to adopt in real time to what is happening today, and still keep your long-term goals and investments in sight. It's not easy, and I think as the world has become much more complex than it was even just 5 years ago, say pre-COVID, and you have the financial crisis in 2008, and then you have COVID, two major events that have changed the world forever, both in capital inflows, outflows, how people move, whether people work at home or work in the office. Massive impacts that are still being felt today and continue to evolve and still haven't settled out to where we are. So I think you have to be cautious, I think, but you still have to, I think, if you want to get the returns that you're looking for, so you beat inflation, I think you need to take some risk, but you have to minimize that risk as much as you can and be able to pivot quickly when things change, move against you. So I don't, I don't have all the answers. I have very few. I have a lot of opinions, but I want to thank you for joining our session today. And geopolitics is complicated, but understanding its impact will help you see opportunities before the crowd. And, again, the main thing I think you should do is read, not just, local, but, in your region, read about what's going on politically, what's going on through the governments, what they're doing for adoption of crypto, what regulations they're putting in place, and build that knowledge and continue to build it, because that will only help you in the future. And the more knowledge you have, hopefully the better decisions you're able to make, but you have to accumulate that knowledge first. So it's a combination of knowledge and experience. And with that, I want to say good night, good evening, wherever you are. And as always, stay smart with your investments. And I look forward to seeing you at the next AMA. And I hope you have a wonderful evening ahead. So thank you very much, and good night.